Hello, welcome to the European Open briefing for Tuesday, April the 18th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at the latest developments in the currency markets today. So we had a rather slow start to the week, given that yesterday many markets were closed for the Easter holidays. The dollar fell to a 5-month low yesterday, following some comments by the US Treasury Secretary Steven Mnuchin. Although it's rebounded a little bit this morning, its gains though are being capped by ongoing concerns about what's happening in North Korea. We had some GDP data out yesterday, as well as some other indicators, economic indicators out of China. That gave a bit of a boost to the Aussie yesterday, although the Australian dollar is down this morning after the RBA's meeting minutes, which painted a somewhat negative picture about the labor market and the rising household debt levels. And apart from that, the other main development is, of course, what's happening with the French presidential elections. Sunday is the first round of voting for a new president in France. We've seen the polls showing a tightening race in recent days. The euro, though, is fairly steady over the past few days. So let's begin with the US dollar in yellow. We can see here in the chart against the yen. It's currently trading around 109 level against the Japanese currency. Yesterday it hit a 5-month low of 108.12. This came after Steven Mnuchin, the Treasury Secretary, said that it was unlikely for the tax reforms to happen before August, which was previously what they had signaled. And the reason for that is that they want to get the healthcare reforms done first. And the reason why the healthcare bill is important is because they want to cut spending on health services, and then they would use that money to give away in terms of tax cuts. If they don't get the healthcare bill done first, then they probably wouldn't be able to make such massive tax cuts. So that's why we're now seeing possible or very likely delay in the health reforms, which now it's looking like probably won't happen this year. The dollar index was also hurt by this. It fell to 2.5-week low yesterday, but we've seen a bit of a rebound this morning, although more with the yen rather than against a broader against the other major pairs. The dollar index is currently above around 100.30. One of the reasons why we saw a rebound is other comments from Mnuchin, where yesterday in an interview with the Financial Times, he repeated what Donald Trump had said about a strong dollar being good for the American economy in the longer run. So that those comments kind of came back and provided some support this morning. But the rebound is kind of fairly limited. We still have lingering concerns over geopolitical tensions, mainly with North Korea. North Korea did carry out a missile test over the weekend, although it apparently blew up before just a few seconds after launch, and it's possible that we will see more North Korea attempting more missile tests in the coming period. So that's obviously weighing on the markets. If we look at what's happening with treasury yields and gold, we saw treasury yield, 10-year yield on US government bonds drop to the lowest since right after the US elections. It hit 2.198% yesterday. Slightly up this morning, but gold obviously benefited from the weaker dollar and the drop in treasury yields. It rose to a new 5-month high, $1,295 an ounce. That's the highest since the US elections. And of course, there's additional support for the yellow metal given the geopolitical tensions with North Korea and to a lesser extent with Syria and Russia. Now let's move on to the Chinese data we had yesterday. We had We had the usual monthly sets of retail sales, industrial output, and fixed asset investment in urban areas. Investment accelerated to 9.2% in the year to date in March. Industrial output jumped from 6.3 to 7.6% year on year, and retail sales also accelerated to 10.9%. But more importantly, we saw GDP growth in the first quarter rise to the highest since the third quarter of 2015 at 6.9%. We also had house prices out this morning. Although they were slightly off from the previous months, they were still fairly strong at 11.3%. GDP growth in the first quarter was driven by higher manufacturing output, which appears to be rebounding from a rather sluggish 2016. We also have a booming property sector, of course, and higher infrastructure spending by the government and stronger retail sales, although we did see a bit of a slowdown in services overall and in construction as well. And the slowdown in construction comes despite the higher infrastructure spending. The government is attempting to curb lending. They've been slowly or gradually tightening monetary policy by raising short-term rates. There's concerns about rising household debt levels as well as corporate debt levels. But overall, the latest figures were seen as positive and also good for the global economy as well. Moving on to the Australian dollar, which yesterday it rose to a two-week high of 0.7610. It was boosted by the better than expected Chinese data, but it's sharply down this morning after the Reserve Bank of Australia in its meeting minutes. They expressed concern about the labour market as well as the fueling household debt levels. The RBA said that conditions in the labour market had been somewhat weaker than had been expected, and with the household debt, they said risks related to household debt and the housing market more generally had increased over the preceding 6 months, and said they would take time for the latest measures to tighten or to apply more stricter lending controls. They will take some time to come through. But also weighing on the Aussie this morning were weaker iron ore prices, which is a main export of Australia. Quick look at the euro before we go. We can see the euro, it was boosted yesterday from the weaker dollar. It's steady this morning around 1.0650. Of course, we've got the elections on Sunday or on April 23rd for the new president in France. It's a four-way race at the moment between Emmanuel Macron, the centrist. He's slightly ahead at 23% in the Elabi poll. The far right leader, Marine Le Pen, is 22.5. The conservative Fillon is at 19.5, and the far left Mélenchon is 19.5. We've seen a tightening race in recent days, and given that there's a large portion of undecided voters, it really could go either way. But for now, the euro is holding rather steady. Quick look at the economic calendar. Finally, we've got the dairy auction coming up later in the day in New Zealand. That will likely have an impact on the New Zealand dollar. There's no data expected out of Europe, but in the US section we're going to have building permits, housing starts, and industrial output and manufacturing output as well out of the United States. That's it from me. Thank you very much for watching and have a great day.